2023 can be marked by many things, but in general, it's been all about technology and central bank liquidity. Today, we discuss both of these topics along with the idea of clusters. What happens when we see only a few stocks running the market, low breadth, and a cluster breakout? Let's go through it all and what it means for you as an investor, trader, or even scalper. Well, welcome back everyone to the Daily Show where we discuss stocks, commodities, and cryptos. We've got the latest news, the key levels, the macro data, and of course, all of the hottest charts coming your way. But let's begin with 4 reasons why the stock market keeps on climbing the wall of worry. Now, we have a lot of reasons to be bearish in markets when you think about the macro side of things. But what's going on right now is most likely the pain trade continuing to be higher. More people are shorting, but at the same time, we're seeing some big gamma squeeze breakouts. Recently, we've had Google, and as of last week, we started to see Tesla start to play the game, and it blew out massively over the last 24 hours. We'll look at that later on. We've also got central bank liquidity to blame. On one side, they're saying we're tapering, and then we see Silicon Valley Bank, Credit Suisse, all of those others, and instantly the Fed come back in with the big bazooka. Now, what happens? It generally leads to asset appreciation. However, that has been on the decline recently, and the markets are pushing some storylines we've seen before. Huge rallies based on maybe something that is disconnected from reality. And we'll look at that a little bit later on. Fears of imminent recession are dashed. We'll take a look at our number one. We're going to get a call of a recession indicator. We'll look at that later on today's video. But in general, we can also say that there was a recession in 2022. They just changed the rules behind it, and that made it so that we avoided it. Did we see the recession? Are we going to see a double dip? My guess is we'll see a double dip recession with, that having some ramifications on things like ERP and other kind of concepts in the markets. And the last one is, of course, the AI craze. We started with Microsoft and Nvidia, my favorite stock and a great one here. Then in about 2 weeks ago, we started to see Google breaking out, and that so far has been in the squeeze. Right now, we're starting to see Tesla do something very similar, and we'll look at that later. So let's go back over to the cluster. Here are some clustered stocks. If we go back through history, we can start to get a bit of an idea when this happens. Now, a lot of people know that generally technology leads us out of recessions or out of bear markets. So far, technology has led, but the other sectors are not coming. XLY, very laggy, started to turn a little bit a few weeks ago and starting to come up. Semiconductors also lagging behind, except for things like Nvidia. Again, we've seen some breakouts. Are they real? We'll have to figure that out as well. And then we get the other sectors moving around. But it is a tale of basically 3 markets. We saw a Dow Transportation Index and Dow 5-day down about a week and a bit ago. And what that tended to lead into was a squeeze, a final squeeze. Funnily enough, it's exactly what we're seeing. In both 2011 cases and 2020 cases before larger pullbacks, we saw a squeeze of 2.6%, and I think it was around 9%. Now, we're well on track to do the 2.6. We've already pretty much seen that. The 9, will we get even higher? We'll look at the options to figure that out. Let's have a look at some of the stats, though, around these. And this isn't, I know I said I'd bring up usually only 30 and 40% stats, but I just wanted to show you what happens around here. And it's not so much that there are significant gains or big percentages. Remember, the market is generally 68% bullish. I always state that 68% bullish. To short it is more difficult. That's why I always suggest if you're going to short, you have to play the options game. You've got to allow yourself time. It's not easy. Let's go over here, though. 5.7% drawdown or 9% drawdown maxes. So will there be a buy the dip scenario? We'll look at a chart a little later that shows us something around there. What about the tech S&P ratio after a multi-week cluster of 1-year lows and then 1-year highs? Well, when we get reads like this, again, it's pretty similar. A lot of coin flipping that goes on over the next 6 months. And it's in line with what a lot of people are starting to think of. Have these markets run a little bit too hot? Are we getting away from reality in terms of the tale of 2 markets? And also, how do we ride it and then potentially not get stuck if it does go bad? Or recognize the rotation? Well, we'll talk about that later on. Let's have a look at bullish sentiment surveys. Now, we've always used this along with other reasons to state that, of course, basically people have been convinced of a certain session. We still see too many bears. Take a look at this AAII bullish sentiment 52-week average. It's in the ground still. We need to see that rise back up. And it's very neutral right now. I think it's sitting about 35, 37% neutral. But in general, there are not enough bulls on these sentiment surveys. It's the same thing here with the Yale US one-year investor confidence, still very low. Unfortunately, you do generally need to see those spike back up. We are monitoring that. We release it every Friday in terms of just getting the data. So definitely stick around on the channel because that's going to be a very good tell. We got it super hard in February. No one believed it. We got that sell-off. Unfortunately, straight after that, while all the banks started going down, central bankers went, fix the hole, and now we are where we are. Let's have a look at S&P 500 pre-election years over the long term. If we take a look here, we've got first year pre-election years, we've got pre-election after midterm bears, and then of course we've got 2023 versus the aggregate. What is clear is that there is a huge component of very sidewaysy kangaroo, slightly grinding up action that tends to happen. We also tend to see a fairly interesting slowdown that happens more around the middle of July. Now, of course, we're not even close to that yet. We're sitting here in June. So will we have a little bit more of a run? Well, my thought process is kind of something like this. Maybe a little run down, base off, probably come back, and then possibly drop, base that, and then probably run back up. Now, how big is this drop? Yeah, that's the question we want to ask ourselves. But I do think that we need to always remain the same way that we do. As an investor, I always remain the same way. If it's not driven by retail property, that is residential property, I'm not that scared because central bankers will always come in the way they have. They come and flood the market. Pension funds in the UK, I've always said the same thing. As a middle-term investor, if I'm looking at the markets right now, the risk reward seems off unless I'm going into certain sectors that I think are going to get rotated to. Technology, though, that's a squeeze. We've seen this play out before. Let's update dumb money versus smart money. We've used this chart. At the moment, it's not giving us too much edge. We're not obviously seeing the huge discrepancies we wish we would see. And we do know that technically, yes, dumb money's rolling this according to this indicator. It's not my indicator, but it does show you here that there is not much edge going on from this. Now, what about buying the dip? Well, we're starting to approach some pretty damning stats towards bears getting their way in markets. Here's one here taken from Carson. We're probably on day 97 at this stage. When we reach day 100, it's a pretty big deal. Now, does that mean we don't get some kind of drawdown? No. I mean, even the stats show you that drawdowns can certainly happen, and they can be in the vicinity of even 10 to upwards of 20% at these kinds of points. However, what is happening here is we've got to be very cautious of not looking at the dip. We know what the central bankers are going to do. And unfortunately, a lot of people have always thought we're going for a hard landing, the whole market's stuffed. I still believe that commercial real estate's a problem. Everybody knows that. Debt ceiling is an issue, sure, whatever. They'll sort that out. And whether that sucks money out of the treasuries, which we'll talk about in another video, and we actually get a hit on that one, it's most likely not going to sustain for too long. So I wouldn't worry. I still think that the risk reward doesn't really make sense in the markets right now. And I'm pretty confident that over the middle term, we will still get a forward PE that is very attractive. The problem is patience. That can be hard. When you're trying to go against the market as well, it can be very hard. So I think day trading still remains good, or sector rotation, which we've been discussing on this channel really for months. Obviously, it's been a big reason why I've shorted metals and energy and those types of sectors. Now, let's move over here to Tesla. I mean, here is the unusual volume. I think you can see the trend here, which I put over on Twitter. This is some wild stuff. Volumes out of control, massive volumes. Look at these calls, 190, 185, 200. They're all stacked for Friday expiration. Let's see what happens over this time. But we're sitting at 188. That's a big reason why they came through. You've got to watch these 0DTE options or these 1 week options at the moment. The market is basically doing a 2021 kind of AMC GME on massive stocks. It's almost like literally a slot show at this stage. So anyway, if you want to follow us over on Twitter. I am sharing those things on the daily. I'll continue to share those 0DTEs. Let's move over to the one indicator that generally tells us a recession is actually going to come versus, or be called very soon, versus the reality of where we are right now. In general, you usually see US 2-year versus 10-year uninvert, or at least 3-month versus 10-year uninvert. That means it goes back underneath 1%. Now, you cannot look at this as anything other than that. If you go back through the history, and I encourage you go and check it out, you'll generally see uninversion, then the recession get called. Remember, it happens when people least expect it. From a swing trader's perspective, and I do stress swing traders' perspective, is it a good time to sell the market? Well, depends on options. You could do that because of discrepancies, but you'd be mostly guessing. We don't have a turn here on markets just yet, and you can see the SPX. We also know that central bankers in general have been pulling some liquidity. However, the Fed got a little sneaky recently, and with this indicator, you can see they've actually injected while they claim they weren't. So I don't know what they're doing sometimes with some of these things. We are getting a huge divergence though. That red, the deep red here on the Qs and the SPX shows mass divergence. So this is most likely a squeeze. We've seen it play out before, and we have what's called a TD. Basically, we've got almost a TD13 starting to appear, a very rare signal in the markets, often really showing you incredible exhaustion. So we're watching those Qs like a hawk. The NASDAQ is being watched very closely by me right now, especially considering we've got these breakouts. Everyone's excited. Everyone's getting involved. This is the time where you do need to be very good on your risk management. Let's move over to ES. This is a Bollinger Band on ES. And you can see here we're kind of pressing that daily. And really when you press the daily, you often go into a sideways, or you might be able to pull like 1 or 2 more days out, push that Bollinger up, and then often you do come back. Now we'll talk about this pullback, which we did on our daily show, to this key 20 moving average, which is the middle of the Bollinger, if you weren't sure, and the most traded level, plus what we know now was demand. There's a decent chance we go back to that. What happens there might be pretty important. Here's a bit of a chart that I shared in the private community, and I did a bit of a macro look ahead. If you're interested, free 7-day trial, links in the description down below in the link tree. Basically, you have a pretty significant repair level that could happen here on markets. Now, this pulls us back down to the 4140. This is the ES, by the way, and it comes back into this demand zone. Now, we know through here is a very, very heavily traded zone. We've got an anchored VWAP sitting behind it. But realistically, what we're looking for is the market to come down and repair some of these pretty inefficient moves. They're moves that have got almost no volume in them. So when you come down to these levels, that's where you want to see those spikes come back through. If buyers are really going to commit, it's going to be here. If you're a bear in markets and you see this flick, it could be what we call a UTAD or a Wyckoff high, and that is a significant switch in trend. If we go to new lows, if we go underneath here, that's where people do stuff. Now, I've always been a big proponent of scaling positions. Now, I'm not going to say that I haven't got a little short on the markets. Okay, yes, I do. I've done obviously put spreads, and I've done it at 4150 in terms of the S&P. Now, I've gone 4 months. Why? Because I don't know which time this is going to go off. I'm looking for the signs, just like all of us are. One of the signs I've mentioned recently is skew decline. I want to see this thing get crushed. Crush the skew, guys. That's what we need. The black swan indicator was getting too high. We never see turns while the skew is going up. So we want to see crushing of the skew, S&P and Qs going higher or starting to go sideways, and then we can go back and have a look at April and August. It's a great little indicator for that. Going a bit contrarian there since the VIX is so useless right now. US 100 futures, just wanted to show you here. We went past a TD9, we're at TD10, pretty much 11 now. So it's a significant weekly and daily kind of thing that's going on here. This usually shows you extreme exhaustion of markets. They don't generally hold this well. So yeah, I haven't seen one of these for a while where it's been on the weekly and the daily on the markets for so much period. But you can see here that this went into a big TD9 read. What happened? We got the sell-off. So we are looking very closely at this market in exhaustion. I'll keep updating you on it. US 100, I'm not touching that thing short. I'm not going for it. It's just not worth it until we prove otherwise. We need to see this thing actually give us a turn. Someone big to not be gamma squeezing every single one of these stocks out. I can't believe we're in 2021 style market, but with $1 trillion companies now. It's the power of the zero DTEs is real over the last couple of weeks, especially. Let's move over to copper. What are we seeing? Weakness, demand destruction. Obviously, the tale of two markets. Keep going down. Well, that's going to be weak overall for many stocks, things like energy, things like metals. Again, markets are very important. If we look at corp bonds saw some rise, but still on a lower high. Generally, I trust the bonds market more. Here's the bonds market implied vol versus the VIX itself. VIX suppression is still there. We saw OPEX last week, which expired some options, but basically we're only given a little bit of room each time. And what I mean by that is we see the options expire. That takes off a lot of hedges, allowing the market theoretically to actually sell this week, because obviously we had all those hedges on. Then what happens though, it looks kind of like this. Then it goes really high into the Fed announcement of rates. So there is now the most hedged event of the year is the Fed announcement of rates. So it just happens time and time again. There's so many puts. These guys just keep stressing puts in the markets, and it doesn't allow us to get those proper sell-offs that we usually would see. But that may change, and of course, timing is going to be everything. Let's have a look at SPY versus dollar index. We've seen recently the US dollar being fairly strong, the SPY being strong with it. Usually a cause for big questions to be asked. I'm just going to put it there, something that we look at. XLY versus XLP. Recently, I've reported on XLY starting to see turnaround. Now, this is very important. Consumer discretionary should theoretically be a sector that does improve. If this is left shoulder, head, right shoulder, this is 1/3 of the US economy. I want to see these stocks starting to pick up. At the moment, they have, but they're not even back to where they were in February as a ratio. So we're looking for that type of thing to occur. And here, of course, is XLK SPX, a good one to have on your charts if you're a tech fan person. And you can see here that it is broken to the new high. We have the stats of when we get a cluster like this and what happens on. What about the last 24 hours in terms of stock options? Well, there was a winner. And the winner was, it's Tesla. Tesla had so much volume going through on the call side. You can really see it here. 1,286 versus 866. Put percentage starting to really decline. So basically, we're definitely seeing some type of squeeze on Tesla. It's come into some zones that, I thought we'd hit. I thought we'd hit about 183, 184, 185, something like that. And we could potentially see selling. We didn't see anybody sell off. It is exhausted. But look, this was pretty clear sign when we saw those blowout, unusual Tesla options. And I think that's what you're looking for. But we've updated you last week on that. We're obviously still looking for blowout trades that are coming out of nowhere, that are moving like 30, 40% of the market. That seems to be starting most of these trends at the moment, which are short-lived, but certainly are there. Nvidia, Amazon, Meta, all some other ones. Check out Russell as well. Russell actually had a huge amount of puts. Take a look at these puts. So we saw put volumes 530K, 65.5% put volumes on this. Russell actually ran off that and did like it. So it actually found some buyers. So puts getting stacked here, but obviously it doesn't look like they're getting paid. Other unusuals, you can see all the ratios here. Pfizer and a lot of the healthcare stocks continue to have some unusual volumes on it. And we saw Upstart come out pretty big as well, with PayPal also finding a little bit of love in these low numbers. So PayPal starting to see some big calls being bought onto it. Not many puts on that market. I'd like to see still more puts deriving to really put a base in there. Let's have a look at some of the biggest trades again, just to see the put-call ratios and the put-call volumes. You can see Tesla here, put-call is 0.67, so definitely some calls out. These are some of the other big runners. Apple, as you can see, totally different ratio to some of the other ones. Google, I feel like it's probably starting to get a little bit too hot here on this one here. But yeah, you can see the differences. And Google, Meta, some of those, Apple in particular, well, not so much Meta, but Apple certainly getting up high. And also Nvidia. Look at the put ratio here, 0.92 on Nvidia. A lot of people's trying to go against that one. I don't know why we're trying to short the highest end stocks half the time. Here are the Tesla levels. We can see the big stock trades. All the unusual volume was on Tesla. The biggest ones for the day obviously came through there. What about money flow? Well, here's a money flow chart that I thought I'd bring up. I believe it's at neutralized equilibrium. And that makes sense when you look at the ES and you think about really the most traded zone. Basically 4,200 and 4,100 and 4K, all around those levels, this next 200 points. They were the most traded level during the 2020 crash, all the way to the 2021 high, the 2021 high to the 2022 low, and the 2022 low all the way to where we are now. It's always been an equilibrium. And hedge fund managers and big managers have adjusted accordingly. I'm truly looking for this to turn down. If that turns down, we've got our sign that something big is going on in the markets, and they just haven't done it yet. Let's move over to our rate probability for the Fed. Let's have a look what that refreshes at right now. And it looks like it's coming in at less. So it went up to like 30%. Now it's back to 15.3% expectation of a hike over the next coming session. Anything else that we need to look at here? We've got silver obviously showing some decline. I bring this up again just to show you the stats. That's a 31% read 2 months. We got that a week ago. Here are some of the big announcements. Wednesday being the most important this week. Nvidia announcement, 7 to 8% move. Yeah, I think that's going to be an interesting catalyst in the markets that we must be watching. And in terms of the rotation over the last 5 days, I know it looks like semis have been the best and everything's been the best in communications and consumer discretionary, but really it's been retail, these smaller banks. So small banks, KRE, still in the squeeze. Still got a little bit left on that one. And of course, we talked about it. KRE doing the best over the last 24 hours and defensive stocks and ags and stuff actually making up the back end. Usually that's not a sign we turn just yet, or at least a significant turn comes through. We need to see more. Let's move over now to some of the other markets around the world. We've got the dollar index. I'm still looking for strong dollar. We got that huge weekly close that brought us in here that really showed us that dips should be purchased at this stage. I'm looking for the dollar to 104 in that area to 104, kind of 104.30. That's where I'll be looking for a turn in the dollar. And at this stage, it still looks strong. For the dollar to be going up, though, and the market to go up, it's not really the thing that you're looking for here. Let's move over to gold and have a look at this one. This is traded pretty nicely. Came back to a heavy traded zone and sold off. If it continues to weaken, we could be moving all the way back down to 1920 for gold. And if we have a look here, it's kind of playing that weekly game of distribution. Let's go to the daily now. Just have a look here. You can see that could be distribution. I'd like to see it go a little lower into this block and maybe some buyers to recommit in here. I've got this green for a reason. So I'm thinking between 1900 and 1920 is where I'd like to see gold go to. We'll find out whether there's some buyers in that area. Natural gas, we expected that to come down. It's actually come to an interesting level. Could be some buyers in here. That was a zone we looked at. We saw a pretty large read of exhaustion. Again, that's what the market's meant to do, guys. To exhaust and then and then come down a little. Well, hey, that's not working at the moment just yet. So we've got to watch that. But yeah, look, could come down a little bit further. You could put something like a fib on here, 61.8 fib. In here as well, 229. If it doesn't hold at this exact level in this 2.5, I think it could go to 2291. But in general, natural gas's breakout has been relatively significant. Nice weekly close, good accumulation base, everything we've been talking about for some time. What about oil? Oil holds the trend line for now, the little mini trend line that we've got here. And it's come back up. It's theoretically in a little short zone. Do I like it? There is a small time frame rally possibility. I don't like it holding around most traded zone. We've said this short. We've said this short. It has twice here. This is theoretically the pullback that needs to go short. I want to see that thing break the trend line down. If it doesn't, I think we're moving to most trade zone kind of number one, which will be, of course, a little bit higher. If we go over to energy stocks, they didn't really perform very well over the last 24 hours. More of the same, though I am cautious around this level. I usually expect the back end of May into June to get a little run here and then something like this to occur. So I could see like that quite easily into the end of the year, though I'm still, if you're going to say, what do I think over the next 3 to 6 months? I'm still negative on demand destruction. I'm positive on demand destruction, so therefore negative on things like energy. Look at Tesla. It just ran. So it hit my targets and then some. I suspected on the weekend we'd hit 183, 185, fill that gap. Well, we did that. Then we push here into the expected weekly options high within 1 day. So in 1 day, we flog all the way back up here, 5% almost on the session, certainly where the options were for the day. And it just shows you've got to read that flow as it comes through. But that squeezed us up higher. We're sitting at a pretty critical level. It's very possible for this market to go back to 195. I think that is possible. I still maintain long term, I think we're going back to 145 for this stock. But you can see here a low or high to low fib would put us in that heavy trade zone. So very possible level on this squeeze, very possible to hit that 195 zone. I'm not in it to the long side at this point, but you could see a little bit more overlay because the one thing about Tesla is it works great off hype. People will be jumping on this and the market might need even more run like we've seen on some of the others. What about Amazon? Well, we know where that's going. It's sitting on these highs. Again, I think Amazon presents one of the better opportunities still in markets. I understand that there's weakness in the American consumer, but it's nowhere near where it was, and it's kind of like floating around. So we'll find out. We'll benefit from AI, in my opinion. You can see Google here. Watch this reaction area just hovering above there. Another little flog day up. I'm not interested in it myself. If this thing really chooses to squeeze, though, it could get wild. Like, it go to fill some of these gaps and go all the way up to 140. That would be something that people would call crazy. I'm not discounting anything. I haven't seen a turn on Google. However, it hit the zone that I discussed. Nvidia, I'm waiting for earnings. I got nothing to say about this thing other than waiting for earnings. Obviously, it's rallying up. I've cautioned sells. The only sell that I was even interested in was in here. We got the sell. It came back BE. That's the kind of thing that sometimes happens when you hammer these positions, and you've just got to really pick your levels. If you're running it still and you're rallying this thing and you're just like, I'm following the Nvidia train. Well, if you're doing it as a trade, is this a scale level? Well, you're getting into those highs. So yeah, I probably would have scaled through here, and I probably would hold a bit, and I haven't seen a turn on it. That's just why I would look at it. Apple, strange how it did this. Certainly looking at the canary kind of atmosphere here on Apple. We will continue to follow this story. I don't have a turn on it yet. You could argue that you got that kind of gap down from the high, which gives you the ability to potentially sell the next 24 hours. It's a risky trade. And you know, of course, stop losses would need to be up here. So you could say, well, it's gapped down, sat. So therefore, weakness in the next trade day. Yeah, I mean, it's possible. It's probably 2-to-1 style trade, 50% of the time, that type of thing, because of the key level would work out. But you can see that little gap up, little sit, gap down, holds. Yeah, could bode for a little bit of shorty short. So we'll find out whether that's what happens over the next 24 hours. Markets are green at the moment, but as we know, usually whatever is happening in the futures market doesn't necessarily happen in the real market. KRE continuing to pop here, 40.46, some very big standouts in that particular market. I'm still looking for KRE to make it back into this structure. 41, 42, that zone is what I'd like for the regional banks. Let's move over to the DAX, the unstoppable force. It hit an all-time high, and then it spiked down. Again, another market at, I mean, what do you want to say about that thing? Absolutely extended into these highs. Certainly, it's stolen people's stop losses, that's for sure, because people have SLs above here. So, yeah, what it does here will be important. We'll keep following it. XJO, boring. Australian viewers, it's still at the zone. It hasn't broken out. Copper weakens. You got to expect XJO to still go down. US 2000 now. Here we go. Are we getting rotation? The old Russell, it's basing off, it's finding this 1800, and we all know this is super important. What happens here is critical. I'm watching the Russell like a hawk. We update tomorrow on the Russell. It is at resistance, but we don't know whether it will break out yet. So there's the Russell. You can see IWM and where it's sitting. Qs, we already talked about those. There's still a lot of block up here. So Qs have a lot to run if they want to. You know, 345, 346, very possible there. US 500 is just kind of floating around these highs. As we mentioned, my thought process for now is it's got some repair to do. I'd like to see it back to the heavily traded zone. Then potentially buyers may recommit if they're going to commit to this trade. If you're actually a swing bear, you need it underneath 4,100. And then a real swing trade would be underneath that level, rally up to the heavy traded zone, and then short off. At that point, you'd say, I know what I've seen there. That's a UTAD. I know what we're seeing. I've seen it enough times to play the stats, etc., etc. That's what we'd be looking at. Bitcoin, what's it doing? Boring Bitcoin, stuck in the zone. Still within the short area, though it has found some recoveries. This into the low, into the high, into the pullback. That theoretically is a small turn. So on the small time frames, actually Bitcoin is now bullish. So we're talking like 10, 15-minute time frames. On the 2-hour, it's still bearish until we really breach through here, which is a big level. We've got most trader level at 28,000. It is bullish on the small time frames. I think that we're going to have problems at 27.5 still, where it is right now, and here, 3 levels. No clear direction. I really want to see Bitcoin underneath these alert zones again. And once we get that, once we get underneath these lows, then we move to 24,000. So if you're a bear, that's what you hope to see over the next couple of days. If you're a bull, well, you hope just break those highs and keep going to the next equilibrium levels. Let's move through to the news for the week ahead. What else do we have going on? RB New Zealand, so that's the Reserve Bank of New Zealand. They're probably going to make some interest rate hikes. We've got, of course, a bunch of news coming out, including Flash Services PMI at 9:45 New York time. Got a bunch of European news as well. Then we move into the FOMC meeting minutes. What does that tell us? Do we get our new dot plot? Stay tuned for that one. I'd be interested. Unemployment claims, prelim GDP, and core PCE price index. They're the big ones. If you enjoyed today's content, remember to subscribe. Smash that like button, guys. Come over and follow. Get some cheat sheets if you're interested as well. Follow us on Twitter. Join our Discord, whatever you'd like to do. And I just want to say a big thank you as always for watching this video. And I hope you have a good one. Bye for now.